Hi traders, welcome to another edition of Weekly Forex Forecast on FSLess, which is for 3rd of August to 17th of August 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well, click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment, so do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Canadian dollar. I have the USD paired against the Japanese yen. I have the British pound sterling paired against the Japanese yen. And then we're going to round up things with the US oil. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. I discussed about the British pound sterling against the USD in my last weekly forex forecast, and then I pointed out the minor key level structure which acts at the price level of 1.29878. I said this minor key level structure may serve as a point of hindrance for the bulls. However, it's a minor key level structure, and that was why we're representing this minor key level structure right here with a blue horizontal line. For the fact this key level structure right here fades to hold price right here in a descent structure, we can see a series of fluctuation of price through this medium right here, whereby we had a series of clustering of price at this medium right here. But in 2019, this key level structure actually held price in a well-defined state. We can see right here as a resistance right here, resistance right here, and the resistance right here, and the price now is closing above this key level structure right here. And then what are we looking at for next week? That was the next month trading, August. So the next key level structure acts at the price level of 1.32114. which was a resistance for the swing high right here. We can see from the swing high right here the massive bearish rally downward right here. Likewise right here is swing high, and then likewise right here a false breakout right here. So next week I want to see what the bulls and the bears have to get on at this key level structure right here, and the minor key level structure, and then as well the next key level structure right here. So next week, if the bulls enjoy a daily close above the key level structure of the 1.32114, it's a signal of a bullish interest willing to pull up price to retest the next key level structure, which acts at the price level of 1.35210. And then this swings high right here is the highest high of the price level of these currency pairs. That was in the year 2019. That was that's December of 2019. And then alternatively, next week, if the bulls failed to pull up price to ensure a daily close above this key level structure at the price level of 1.32114, don't be surprised if the bear steps in to pull price downward to retest. That was a minor key level structure which acts at a price level of 1.29878, and then failure for the bulls to defend this key level structure right here. Don't be surprised if the bears pull price downward to retest the previous key level structure, which acts at the price level of 1.27547. This was a high resistance right here for the trend rally downward right here. Likewise, a support for this swing right here. And then let's view or zoom in on our trading chart right here. So if I should zoom in on this trading chart, we can see right here we got this key level structure right here as a support, and then right here as a support, and then right here as a resistance. So don't be surprised if the bears pull price downward to this major key level structure right here. And then if the bears should pull price downward right here, then the bulls have to do all what they can to defend this key level structure at the price level of 1.27547. So if the bulls can defend this key level structure, then I won't be surprised. This is the first wave upward right here, another wave downward right here, whereby this will be high, low, and then there's a new high, we got a high right here. Then this region right here have high probability to transform into what? Into a new high low for a more bullish upward rally. So next week I want to see what the bulls and the bears have to get done at the price level of 1.32114 and the minor key level structure of 1.29878 right here. So the British pound sterling against the USD is on my watch list next week. The next currency pairs on our watch list is the Euro pair against the USD. And then we can see right here our price made an aggressive bullish rally from the swing after the retest of this bullish flag right here. From the swing low right here, price made a bullish aggressive rally, and then we can see price actually made a close below the key level structure of the price level of 1.18107. that was a Friday bar. And then there's something I want to show you guys based on the monthly chart frame. So let's check the monthly chart frame of the euro pair against the USD. Here comes the monthly chart of the euro pair against the USD, and then I have been emphasizing on this note chart pattern transformation based on the monthly chart frame. And then I said a monthly close above the dynamic structure, which was a resistance for the swing high right here. We got it as a resistance right here, likewise right here, and then right here. We can see at the moment right now, the month of July did ensure a daily close above this dynamic structure right there, which is a signal of a bullish aggressiveness, bullish interest, willing to pull up price upward. So let's try the zone mean on this chart right here. Okay, now we can see the pattern right here. It's like a kind of inverse head and shoulder. If I should view right here, you can see right here and then right here, whereby we can tag this zone right here as a neck line. So for the fact the month of July closed did ensure a close above this dynamic structure right there, it's a signal of bullish interest more to come on the currency pairs of the euro against the USD. And then the next key level structure right there actually rejected price downward. You can see how this key level structure serves as a support for price right here, likewise support right here, and there as a resistance right here, and it did act as a resistance for the month of July. So what are we looking out for in this month of August? The next key level structure we have to pay close attention to is the price level of the 1.16071. We can see how it acted as a support right there, likewise as a support right there, a resistance for price right here, and a resistance for price right here. So I wouldn't be surprised if the bears put price downward to retest the major key level structure, which acts at the price level of 1.16071, and then the bulls have to do all what they can to defend this key level structure right here. There is a price level of 1.16071. If the bulls can defend this key level structure right here, then this structure will definitely turn into a retest of a dynamic structure right here, and then this dynamic structure have to act as a new dynamic support trend line, which if this should occur, then this can lead to more bullish aggressiveness to pull price upward for more bullish upward rally. And then failure for the bulls to defend this key level structure of the price level of 1.16071 and the dynamic structure right here, also the price level of the 1.14960. If the bears can ensure a monthly close back into this dynamic structure of this symmetrical triangle of the multi-year chart pattern formation, then I wouldn't be surprised. This is actually turning into a false breakout on the euro pair against the USD. So let's check back on the daily chart frame. Back on the daily chart frame of the euro pair against the USD. So next week, I'm gonna patiently wait to see what the bulls and the bears have to get done at the price level of 1.18107, which is actually a point of resistance, and then the next key level structure, which acts at the price level of 1.16071, which is actually now a point of support. The next currency pairs on our watch list is the USD paired against the Canadian dollar. And then we can see right here from the swing low right here, price made a bullish upward reversal. Likewise, price is at the key level structure of the price of 1.33388. And then this medium right here have high probability to transform into what is being called a double bottom for a bullish upward rally. And then if I should zoom in on this currency pairs right here, you can see this key level structure which acts at the price level of 1.33388. You can see as a support right here, we got it at the support right here, and then as a resistance right here, as a support for the bullish upward strong bullish rally right here, as a resistance right here, likewise a resistance right here, and then as well a resistance right here. So this is a multi-year key level structure we have to pay close attention to on the currency pairs of the USD against the Canadian dollar next week. So let's zoom in on these currency pairs. And then Thursday bar did ensure a bullish engulfing bar. We can see the bullish engulfing bar on this currency pairs. We can see it engulfed the first bar right here, the second bar, the third bar, the fourth bar, and the fifth bar. You can see this bullish bar engulfed 5 consecutive bar formations right here. So this is a strong indication of a bullish interest to retest the next key level structure, which acts at the price level of 1.35212. And then we can see this key level structure here was a support right here, likewise was a support right here for this rally in the consolidation phase right here. So next week, I'm going to patiently pay close attention to see what the bulls and the bears have to get done at the price level of 1.35212 and a key level structure support of 1.33388. So if the bulls ensure a daily close above the key level structure of the 1.35212, the bulls have to defend the key level structure in order to re-expose the next key level structure acts at the price level of 1.36708. Failure for the bulls to ensure a daily close above this key level structure next week, that is the price level of the 1.35212, then don't be surprised if the bears pull price downward again to retest this key level structure that was the support of the 1.33388. This is a very strong key level structure whereby the bulls have to do all what they can to defend this key level structure, for the fact is the multi-year key level structure level. And then if the bulls fail to defend this key level structure of the price level of the 1.33388, don't be surprised next week if the USD drastically depreciate in value to the next swing low right here, we should act at the price level of 1.322000. And the failure for the bulls to defend this key level structure right here, don't be surprised if the price of the USD drastically depreciate in value to this lowest swing low of this currency pairs in the year 2020, and then this price level acts at the price of 1.29727. The next currency pairs on our watch list is the USD paired against the Japanese yen. We can see how Monday bar did broke through the key level structure, which acts at the price level of 106.044, which was a support for this short-term bullish rally right here, as well as a support right here for this bullish rally upward right here. We can see how Friday bar did ensure a strong aggressive bullish engulfing bar by the rejection of the key level structure, which acts at the price level of 104.463. And then there's something I can figure out on this currency pairs right here. We can see this was a swing low base right here. We had a swing high right here and a swing high right here, swing high right here. So we can tag this medium right here as a descending triangle. So next week I want to pay close attention to this chart pattern right here. So if the bulls should ensure a daily close above this key level structure of the price of 106.044, then this pattern right here have high probability to transform into what is being called a false breakout, whereby the bulls have to retest the next key level structure, which acts at the price level of 106.740 before they can re-expose the next key level structure, which acts at the price level of 108.007. Alternatively, next week, if the bears comes in, whether they make a pullback of price to the 50% Fibonacci level of this bullish engulfing bar, and the bulls fail to defend this 50% Fibonacci retracement level, then don't be surprised the bears are willing to retest the key level structure, which acts at the price level of 104.463. And then failure for the bulls to defend this key level structure don't be surprised, the USD is heading to the next key level structure, which acts at the price level of 102.014. I want to show you guys what I can figure out on the weekly chart and the monthly chart of this currency pairs as well. So let's check on the weekly chart frame. Here comes the weekly chart of the USD paired against the Japanese yen. We can see the swing low right here, September of 2019. We can see the massive rejection right here. That was March of 2020. And then we can see right here now the pullback of price, whereby price carved a bullish, strong bullish pin bar. This is a bullish pin bar which have high tendency to interest the buyers to pull up more price upward. So let's check on the monthly chart frame as well. Here comes the monthly chart of the USD paired against the Japanese yen. We can see the transformation right here in this pattern right here. This is symmetrical triangle. The month of July did fail to break out of this symmetrical chart pattern right there. So the USD against the Japanese yen is still in a state of fluctuation within this symmetrical triangle. So it's gonna take a monthly close before we can know the next movement of USD against the Japanese yen. Maybe it's a bullish upward rally or maybe a bearish downward rally. So let's check back on the daily chart frame. Back on the daily chart frame of the USD paired against the Japanese yen. Next week, I'm going to patiently wait to see the reaction of the bulls and the bears at the key level structure of 106.044 and the benchmark level, that is the 50% feeble level of this bullish engulfing bar right here, and then the key level support which acts at the 104.463. The reactions of the bulls and the bears at this theory key level structure will give us a more information of what the bulls and the bears are trying to get done on this currency pairs. Maybe we can anticipate for a bullish upward rally or step back to look out for a more downward bearish rally. The next currency pairs on our watch list is the British pound sterling paired against the Japanese yen. We can see how this trend right here broke out of this symmetrical triangle. You can see the trend broke out, whereby we have a swing high right here, we get a swing high right here, a swing low right here, same goes right here, and then right here. This was a high low, and the right here a low right here. We got a low high right here as well, a low high right here, and then a high right here. And then last week we can see how the key level structure of the price level of 139.122 serves as a point of resistance for this bullish upward rally, and which was a resistance for the swing high right here. That was a midpoint of June and July 2020. Likewise, a series of no rejections right here. And then if I should zoom in on this currency pairs right here, we can see how it acted as a support base for this consolidation phase right here. That was in last year, November and December of 2019. So this key level structure right here, it's a very strong key level structure we have to pay close attention to next week. And then next week, if the bulls ensured a daily close above this key level structure of the price level of 139.122, don't be surprised, the bulls are actually heading up to retest the next key level structure, which acts at the price level of 141.053, which means the waves right here is actually transforming into a bullish no wave pattern, whereby this will be what? A high. Then the next wave right here will be high. Likewise, we did have a high low right here, and then right there a high low right here. Alternatively, nothing is impossible in the market. If the bear steps in next week, whereby they make a rotation of price downward, the bulls have to do all what they can to defend this dynamic structure right here. Failure for the bulls to defend this dynamic structure right here, then don't be surprised if the bears pull price downward back into this symmetrical triangle, and then this may constitute as a false breakout for the bullish upward rally right here. And the bulls have to do all what they can to defend this key level structure, which acts at the price level of 135.457, which was a support for the rally right here, and the right here as a resistance, right here as a resistance, right here as a resistance, likewise right here as a resistance. So this is a major key level structure, very strong key level structure the bulls have to defend next week. That is if the bears pull price downward into this symmetrical triangle. Failure for the bulls to defend this key level structure, don't be surprised, the price of the British pound sterling is heading drastically downward to the minor key level structure which acts at the intersection of the price level of 134.000, and then this could lead into more crash downward into the major key level structure of the price level of 131.928. So next week, the British pound sterling against the Japanese yen is on my watch list. I want to see what the bulls and the bears have to get done at the major key level structure, that is the resistance level of the price level of 139.122. So the reaction of the bulls and the bear at this key level structure will give us a more information of the next direction of the trend on this currency pairs. Maybe it's gonna be a bullish upward rally or a downward rally. It's time we wrap up our analysis with the US oil. We can see the US oil now has been fluctuating in a narrow bullish wedge. You can see the transformation right now on the daily chart frame. We can see the high swings right here, the lows right here, the lows right here, high low right here is a high low, right here is a high high, and the right here we have a high high, right here we have a high low, right here we have what, a high low, and then at this medium right here, price failed to carve what, a high high, like we did at right here and then right here. And then we can figure out our price made a bullish upward rally to carve what, a high high right here again. But at this time, this bullish momentum right here, it's a very kind of weak bullish momentum at this medium right here. And then we can see the key level structure, which acts at the price level of 42.01, which was a resistance which had been rejecting price of the US oil. Likewise, we did figure right here. And then we can see how the bulls defend this swing low right here. This was a swing low of the price level 40/39. We can see how the bulls ensure a pullback upward. For as long the high low swing right here still hold up price of the US oil, that is the price level of 39, it means the US oil is still under the influence of this bullish upward rally right here. Not only if we can see a daily close below this high-low swing right here, that was a midpoint of July 2020. If price can ensure a daily close below this swing low right here, then it's a signal of a new transformation of a bearish rally. For as long the bulls are still defending this key level structure swing low right here, which acts at the price level of 39, then the US oil is still going to transform in a consolidation phase, and then continuous retest of this resistance level at the price level of 42.01. It's a signal of bullish interest willing to make a breakout of price out of this key level structure. This is a clustering of price to a resistance, which is a signal of a bullish interest. So on the US oil next week, I'm gonna pay a close attention to the price level of the 42.01, which is the resistance for the US oil. As well, I'm gonna pay a close attention to the swing low right here, which is the price level of the 39. So a break downward below the 39 will signal bearish interest, and a break above the resistance key level structure, which acts at the price level of 42.01, would signal bullish interest on the US oil. If you haven't joined my free forex trading class, 3 times in a week I do hold free forex trading webinar. Click on the link at the bottom of this video so you can get access to that class. In this class, you have access to hacks to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of this video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.